So we are in the fourth unit, that is regarding the accounts. Okay. So first, in the previous class we have seen the double entry system, and also we have seen the advantages of double entry system. And now we are going with the classification of accounts. So all the business transactions are broadly classified into three categories. One is relating to a particular person. The other one is relating to a property or an asset. Okay, machinery is also called as an asset or a property. And the third one is those relating to the income and expenses. Third one is related to the income and expenses. First one is relating to the person, and second one is relating to the property in the sense assets, and third one is relating to the income and expenses. Okay, so we have three classes of accounts. Three classes of accounts has to be maintained for recording all the business transactions. So what are they? We have three classes of accounts and they have to maintain on recorded. They are for um, recording is meant for all the business transactions. So in that, first one is a personal accounts. First one is regarding the personal accounts. Second one is regarding the real accounts, and third one is regarding the nominal accounts. Okay. First one is personal accounts. The second one is the real accounts, and the third one is the nominal accounts. Generally, the personal accounts in the sense that is the name of the persons. We have the name of the persons, or else name of the companies which are supplying some material or some other category of items. They are generally called as the personal accounts. That will be generally name on the name of a person. Second one is regarding the real accounts. Real accounts are nothing but they are related to the assets. Some assets or properties account. Okay. The third one is the nominal account. These nominal accounts are for identifying the profit or loss, other expenses, and what are the incomes we are getting, like this. So see here, we have the personal account, personal accounts. These are the accounts relating to the names of a person, okay, firm or a company are called as the personal accounts. Say Rama account, Gopal account, or Nagarjuna Finance Limited account, Andhra Bank account, like this. Specifically we have some accounts, right? Rama may be a person who is supplying the raw material, one type of raw material. Gopal is the other one, maybe supplying some other type of raw material. Okay, or else he may be the person who might have given you some investment, and for that investment there is a capital. You have to pay some money in return. Okay, that may be such type of account. That may be a Gopal account, for example.
What
Nagarjuna Finance Limited account. We might have bought some money from as a from some financing.
బాటుగా ఎవడ్రా నువ్వు బాటుగా
Okay, we might have bought some money as a capital from Nagarjuna Financing Limited account. So from that company, we have to pay monthly some interest to that particular company, or we are paying some EMI to that company. So that is also a personal account. Andhra Bank account. For example, here they are taking the name as Andhra Bank account, but that may be some other bank, maybe a nationalized bank or a government bank, or else maybe a private bank, whatever it may be. Okay, so if you are getting more profit, you may be depositing that money in this Andhra Bank account. Okay, and you will be generally paying the EMI with the profit what you got and the goods by selling by yourself. Okay, so debit and receiver. So here we have a debit and credit rule in the personal accounts. That means personal accounts in the name. That means name of the accounts. What do you mean by that? Means personal account means it will be related to some particular person or else some particular company, that is a finance company or some Andhra bank account. So generally, if you have some profit, you will be storing some of the value of money in this some bank's account. And if you are if you have taken money from some other person, that may be a person or else some finance company, you have to pay money back every month in the form of EMI, right? They all are related to these personal accounts only. Okay, that debit the receiver. Okay, debit the receiver and credit the giver. Okay, debit from the receiver and credit from the giver. So if I have a goods, okay, if I have, that means if I am buying some goods from outside, I am the receiver, right? The cash related to that will be debited from me. That means since I am the receiver of the goods, some money will be debited from my account, and I will credit that money to the giver. Do you understand now? Debit the receiver and credit the giver. If you simply study, you may not give know the exact meaning. So debit the receiver and credit the giver. That means debit the receiver. Debit the receiver in the sense the persons the persons may be charged some amount. So debit the you are getting that goods by debiting some amount from you and crediting to the giver, the person who is going to give, we are paying to him, right? Next, real accounts. Accounts relating to the properties and or assets are known as the real accounts. Example, machinery account, furniture account, cash account, like this, right? They are the real accounts, assets. Machinery account, right? If you are having a very big industry, in that we have some huge machinery. From time to time, you have to maintain that machinery, and you have to see that whether it is going to work properly or not, or whether it is already working properly or not. You have to see, right? Accounts relating to pro- accounts relating to properties or assets are known as the real accounts. Example, machinery account, furniture account, and cash flow account. Okay, cash flow account. This is also a real account. So in this debit credit rule is debit with debit what comes in and credit what goes out. In the real accounts, you have to debit what comes in. If you are getting some interest from the bank for every 3 months or 6 months, so we debit what comes in and credit what goes out, right? Next, nominal accounts. We have some nominal accounts. You can see in the nominal account, accounts relating to the accounts relating to expense, accounts related to the expenses, losing intercom, loses income and gains are known as nominal accounts. Accounts relating to the expenses, losses, incomes, and gains are known as the nominal accounts. Okay. For example, salaries account, commission received account, uh, internship, interest paid accounts, salaries account, commission received account, while well credit all the incomes and gains, right? In the nominal accounts, debit all the expenses and losses and credit all the incomes and gains. So you just revise once again in the debit card rule, debit credit rule, debit credit rule for the personal accounts. Personal accounts means related to the some persons. That may be a company also, but it is particularly to some particular persons. Rama account, Gopal account, Nagarjuna Finance Limited account, Andhra Bank account. These all are called as the personal accounts. In the personal accounts, debit the receiver and credit the giver. In the real accounts, you can see accounts relating to the properties or assets are known as the real accounts. What is this relating to the that means real accounts as accounting accounts relating to the properties assets are known as the real accounts. Examples: machinery account, furniture account, and cash accounts. Okay, they all are our assets. They are generally called as the real accounts. Next one is the nominal accounts. Nominal account in the sense accounts relating to the expenses, losses, income, and the gains are known as the nominal accounts. Examples will be salaries. Example for the nominal account is salaries account, commission received account, and interest paid accounts. Okay, those all are the nominal accounts. So that is double entry system, right? Now we go with the journal. So journal is derived from the Latin word journ, Journ, which means a day. Journal means daily. That means journ means day. Therefore, journal means a day book. Journal means a day book where in day-to-day business transactions are recorded in the chronological order in order of the dates. Okay. Therefore, journal means a day book where in day-to-day business transactions are recorded in the chronological order. Chronological order in the case means in the dates. So first we'll write on the date 1 of this month November. Next we will be writing date 2. If there is any transaction with the faculty, day-to-day business transactions are recorded in the chronological order in the order of the dates, right? That means first date on the first day. That means first we'll write day 1, and the next we'll write day 2, and next we'll write day 3. If there is any transaction, that will be entered in the day wise, right? Journal is treated as a book of original entry of first entry or a prime entry. Okay, generally we used to call it as the day book, right? Journal is treated as a book of original entry or first entry or prime entry. Okay, all the business transactions are first entered into the book before they are posted into the ledger, right? So the day book, everything, whatever the transactions are happened, first they will be written in the journal book, that's the day book, and then it will be entered in the ledger, right? So we have different types of books, right? Double entry system, that is one type of system. Okay, double entry system is one type of system. The first one, we have different types of books. The first, that one is the day book. That is generally called as the journal. Okay, so generally it is also called as the prime entry, first entry or the prime entry. So all the business transactions will be first entered into this book before they are posted in the ledger. This process of recording a transaction in a journal is called as journalizing. Okay, journalizing. If any transaction has happened, that will be journalized first. Okay, the entries made in the book are called as journal entries. So you can see here journal pro forma. First you have to write your date here. Next, name of the account to be debited. Name of the account to be debited you will be writing here, and in the debit side you will be writing the amount, and name of the account to be credited. So here you will be writing the name of the account to be credited, and you have to give the narration or explanation why it is. That means the transaction, for what the transaction is related to. For example, so if you are willing to pay some salaries, okay, so or else you can see here some some company has given you the raw material. Some company has given you the raw material. That means they bought the raw material. Now you have to pay the money. Okay, name of the account to be debited. You have to pay the money means that means you have to debit from some cash. You have to debit some cash from some account. Your accounts, that means you have some capital account, for example. So if your for example, if your Andhra Bank account is your capital account, you have to debit from that capital account. That means the Andhra Bank account. That means you are debiting from the Andhra Bank account, and you have to write the name of the account to be credited. So the person who bought the raw material, that is the name of the company. Name of the company. You have to mention that name of the company with your some address, and you have to give the explanation or narration here. That means what you have to say. You have to say so and so a company. So and so company has given the raw material, this much weight, this much this thing. You have to pay this much amount, right? That will be credited into their account. Okay, it will be debited from the your capital account. right? For example, there. So here we have some particulars. Date. The year is written at the top of the data date column of each page of the journal. Thereafter, the next line of the date column, the month and the date first entry was written. Okay, you write entry one as your date. Generally, you will be writing the year on the top, but also you have to write your uh, date, month, and year also here in the date right column. In the particulars, you can see these are the particulars. Name of the account to be debited is entered on the extreme left of the particular column, and DR debit means we are debitor. We are saying as debit means DR, that means debitor is written in the right end. The name of the account to be credited is entered into the next line with a prefix to. That means we are saying that we are debiting from. DR means we are debiting from this cash account, that is a capital account. For example, we have the capital account, it is debiting from the capital account, and we are transferring it to the created that means the person who brought that particular material. And below that, we will be writing some short explanation of the transaction. That is, narration is given immediately below the account credited. The narration should be adequate to explain the transaction and should always appear within the brackets. Okay, the explanation has to be given in terms of brackets only. It always starts with the word being. It always starts with the word being. Okay. Okay. At the end of the of a thin line is drawn to indicate the entry of a transaction is complete with all the aspects, right? After writing your explanation, just you will write a small tick mark here. That means just a small underline, you'll underline there. Okay. What is this LS? LF means ledger folio. So LF means ledger folio. That means when you write, generally what we'll do is this is journal. Journal means that's a day book. You will be writing all the entries in it. After that, you have to from this journal you have to update it into the ledger book. Okay. So when you are updating, so you said that name of the account to be debited here. That means in the previous here we are debiting from the that say capital account. You are debiting from the capital account. That means on the capital account, on what page you have written, you have to write there. LF means ledger folio number there. So ledger folio in this column, the page number of the ledger on which the debit and the credit accounts are posted is recorded, particularly in the column. This column is not used. Okay, particularly this column is not used because the page number of the ledger is not known beforehand, right? Okay, we'll write LF. It's a table created. Everywhere we have to follow the particular standard of table only. That's the reason why we will be having that LF, but we don't mention it. Why? Because we will be writing this ledger book later, right? First, we'll entry into the day book. That is the journal book. So, if you have time, means after entering this book, entering these details, it has to be copied into the ledger book. In the ledger book, you will be writing. In the ledger book, you will be keeping for for that particular company. You will be maintaining one page. In that page number will be written in this ledger folio. But we always keep this one empty while we write this. While we prepare the ledgers also. Sorry, while we prepare this journal pro forma. Okay. So see here, debit. The amount to be debited is entered in this column. Amount to be debited will be entered in this column, and amount to be credited is entered in this column. Okay, generally what we do is, so we will write from where we have withdrawn, that means dr, debitor account. Debitor account will write here, amount here, and here you'll write the creditor account, and you will write here the credited amount. Generally this amount and this amount should be the same. This account and this amount should be the same, and where you will be writing here the explanation between the both, right? So that is how you make the journal. Next you have to make the ledger also. See here, journal you can, sorry, now it is the ledger time, right? After recording a transaction in the journal, the next step is the transferring of transactions in the respective accounts in the form of a ledger. Okay, after writing the journal, you keep aside, and then you take the ledger book, and you have to enter the transaction which is noted in the journal into the ledger book. Ledger is a principal book of accounts. It contains all the accounts of business, whether personal, real, or nominal. It is also called the book of final entry. Okay, ledger book is the final entry book, right? Contains all the accounts of business, whether the personal, real, or the nominal. We said that we have three varieties of accounts, that is personal account, real account, and the nominal account. Nominal account is meant for to identify the profits, gain, or losses, like that. A real one is regarding the assets, that may be a machinery or some place or some land, like that. And personal account is nothing but name of the persons or the name of the some companies. Those are called as the personal accounts. All this information will be uh, has to be entered into the ledger book, right? This ledger may be defined as a summary statement of all the transactions relating to a person, assets, expenses, or income which have taken place during a given period of time, and shows their net effects, right? So see here, I am writing DR here. DR means debitor side. This is CR means creditor side. Sorry. Okay. Debitor and creditors. Okay. We have, this is the half part. This is the half part. So debitor side. The debitor side will also have date, particulars. JF means journal folio. Journal folio. That means uh, we will write the page number of the journal here, page number of the journal here, and the book number also, right? Generally if one book completes means we'll open and write in the second book, right? That means book 1, page page number of that particular page of that journal. Okay, journal folio means the page number of the journal book, right? And that book name also, and amount. In the debitor side, you will be debiting. That means you are debiting some amount to whose account? The name of the creditor account. You are on the debitor side. You are writing to the, so Gopal account. Okay, amount. We are to the Gopal account. We are paying, say example, 3,000, and the transaction is present in the book one page 21, journal folio. That is journal folio, right? Next, on the same date, so this is the credit side. This is the credit side. That means in the ledger book you have to write by the name of the debited account. So here, what is the account that person account is? Say said I have said now Gopal account, right? So Gopal account by the capital by the capital account by the capital account the amount. So on the credited side, you are writing by the capital account the general folio number and the amount. Okay, do you understand now? This is saying where this money is going. On debitor side, we, why we have debited, we are saying here. We are mentioning why we have debited. And here we are writing name of the debited account from where we have withdrawn. We are writing that is credit. In the ledger, each account is prepared in T shape. Okay, is it right? This is written here, and now we'll have below. It is one column. It is one column. It is one column. These all are one columns, right? In ledger, each account is prepared in a T shape. Each account is divided into two equal parts by a vertical line. The left hand side of the account is known as the debit, and the right hand side is known as the credit. Each of the two sides is further divided into four columns. Okay, this is for column 1, column 2, column 3, and column 4. Okay, and the four columns, they are date, particulars, JF, journal folio, and the amount. Right. So you know all this. Date, the column recorded year, month, and the date of transaction. Particulars. This column records the names of the accounts to be credited or debited side in the name of the account to be debited of the credit side, right? This is the explanation what I have given, right? The names of the accounts in particular column on the debit and credit side are preceded by the words to and by. By will be used on the credit side, and to will be used in the debit side. Okay, journal folio. It is it is a records page number of the journal from which the posting to the ledger takes place, right? Now you have already written the journal. That means you will be having some page number that has to be written in the journal folio. Okay. Now, um, if you have any doubt by seeing this principal book, that is ledger book, you can go and verify to that particular journal folio. Okay. Amounts. What's the amount means? Amount columns on the debit or credit or side of the account. Amount column or debit or credit side of the account recorded with the amount of each transaction, right? You have to amount means that is money, right? Okay. Next is the fund flow analysis. Okay. So in the narrow sense, the term fund means cash flow only. Okay. Funds means cash. In the broad sense, the term fund means working capital. Okay. Funds means the cash, and also the fund means the working capital. To run the business, you definitely need some amount in your hand. That is generally called as the working capital. So some capital will be kept somewhere, that is stagnated, right? Working capital indicates the difference between the current assets and the current liabilities. Okay. Working capital indicates the difference between current assets and the current liabilities. Assets means properties, and that means which is plus for you. And current liabilities is nothing but the things what you have to pay. That means you might have got some loan, like that. The term working capital may be generally the gross working capital. It represents the total of all the current assets. Okay, gross working capital. which represents the total of all the current assets, and the net working capital, it refers to the excess of current assets over the current liabilities. Okay, gross working capital, net working capital. These two are the combination. These are combinedly called as the working capital, gross working capital and net working capital. This gross working capital represents total of all the current assets. Net working capital refers to the excess of current assets over the current liabilities. That is net working capital. Right? The term flow means change, and therefore the term flow of funds means change of funds or change in working capital in the change in working capital in the normal course of business transaction, right? Inflow of funds and outflow of funds. Okay, so it represents the total of all the current assets and it refers to the current assets over the current liabilities. That is net working capital. This is gross working capital. So flow means change, right? That means it is changing from one state to the another state, right? This working capital will be changing from one form to the other form, right? So in the frame, to run your business, we have some funds to come inside and some funds to go outside. Okay. So here we have some definition for this fund flowing, fund flow analysis, right? In this definition, you can see a statement of source, a statement of source, that means inflows, and applications, outflows of funds, is a technical device designed to analyze the changes in the financial conditions of a business enterprise between two dates in the sense accounting periods. Okay, Fulke. Fulke has given this definition. The statement of source, that means inflows, and applications, that means outflows of fund in a technical device designed to analyze the changes in the financial conditions of a business enterprise between two dates, that means in a particular period. It's totally nothing but the fund flow analysis. Just that means fund flowing means this thing. That means we have some money. It is coming from somewhere, and we are spending that particular money for some other sake. That means if a person brings the raw material, you have to give him the money. Here the inflow is raw material, outflow is some cash, right? So inflow cash in the sense you are getting this inflow cash from the financiers or else from the banks, right? By selling some shares of your company like this. So in the next class, we'll see these objectives. Objectives or importance of the fund flow statements. Okay. So far we have seen double entry system and classification of accounts, and also ledgering, how to ledger, and the basic definitions of the fund flow analysis. Okay, we'll have detailed explanation and analysis of this fund flow in the next class. Okay.